that's when trader psychology becomes really interesting. They will never believe you if you say you're going to need this. Oh no, I'm just going to get this system in. My teacher knows how. We're going to just be minting money. Blah 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 blah. No, get there and all of a sudden feel the potential of loss or the potential of making a bunch of money. And what happens is that the emotions just blow you out, and you're back in ancient caveman time, and your thinking brain has just been relegated to the caboose of a train.
Looking at the final 1 minute and 20 seconds of the day. These two lines here, the top line and the bottom line, were my boundaries for what I was thinking was going to happen. So the last 10 minutes of the day started here, and I was thinking price action is probably going to hit this line first before it hits this line. And I only said that because of the 2-minute MACD movement. Where do you see this MACD going? It had momentum building up before the last 10 minutes even began. Yep. And then when the final 10 minutes kicks off, which is right here where I made the prediction with these two lines, the final 10 minutes always triggers the end of day selling algorithms. Always. And that always creates volatility, and it creates opportunity, which is where one of my edges come into play, one of my strategies. As you can see today, I was assuming the price action was fluctuating around here, and this was where the when the 10-minute algorithms turned on, this is where the price was, right here. Using the clues that are leading up to the final 10 minutes, along with the 1-minute volume analysis, doesn't this look like there's more selling than there is buying? See, it's kind of obvious. This is the final 15, 20 minutes of the day. This is what was leading up to me making this call right here, this decision. I didn't take the trade, but I should have, because why not? But regardless, let's go over today to see how the strategy worked, how many times the strategy came into effect. And we had we took 2 trades today, signified by these yellow lines. Let's go over, leading up to the market open, let's go over what information did we have. So here is the daily MACD. Look right here. MACD tells us momentum. It's a momentum indicator. The past 3 days, we've been losing momentum. There's been selling pressure building up. So before today even began, we didn't have this to go off of. We didn't know what was going to happen. We can't tell the future. Before the market opened today, we just knew that the daily momentum was literally going towards selling pressure. That's what we had, selling pressure on a daily momentum. So then the market opens here, and we have a huge sell-off. I almost captured it. That's what these red lines mean. Red lines mean this is a short position I would have taken, but I didn't. And then the blue lines right here mean this is a long position I would have taken, but I didn't, for various reasons. But the reason I'm bringing that up is because the daily momentum was giving us clues. And furthermore, our 2-hour momentum was in the negative region. It's not in the top region, it's in the negative region. And we had red, we haven't crossed over yet. So we have some clues to look for a downward movement, okay? And then one of the most powerful clues emerged. Look at this. The 5-minute twins, the 5-minute regular hours and the 5-minute extended hours were both aligned right as the market was opening. That's rare. That's a rare event, and that means that probabilities are stacked. You have a greater edge at those times. That's part of the reason I'm upset with myself, is because in the moment I knew what was happening. I saw this. I wanted to take this position here. This would have been my entry. The stop loss would have been slightly above that candle, and I would have targeted a 2-to-1, allowing for runners to continue running to make great profit. I didn't take the trade because it was the beginning of the market, and I was experiencing fear because it was the beginning of the market, and that sucks, and that happens from time to time. My trade happened right here. This is where I decided to take a trade. Why? Because I missed the initial move. I missed this move. Now the 5-minute MACD momentum is not going with me, but it popped back up. It popped back going with me. We're losing. We're going in the right direction here. We had a volume confluence, a huge selling candle. So I entered the trade here, put my stop loss here. which was hit. So that was a small loss, but it was a loss. And you know what? That's all right. Had I taken these previous entries that I wanted to take, that my intuition was telling me to take, they all would have been wins. All of them. All would have been just great wins. And that's all right. That's whatever. I missed this trade here because of no good reason. I should have taken this trade as well. Look at this, 5 minute. We're on the right side of the MACD momentum. Both of them are going to be basically in sync at this point. The extended hours and the regular hours. After you get about 2 hours in the market, they're both basically in sync at that point. So I just rely on the regular hours for my gauge. We've got permission to take a trade to the upside at this very current point in time. We have a volume confluence, volume bar greater than the previous 3. We're on the right side of the momentum. Stop loss would have been slightly below this candle. Targeted a 2-to-1 or a 1-to-1. That would have gotten way more than a regular target. That would have gotten 2 or 3 or 4 times your target. Specifically because your stop loss would have been down here. And look what happens. The price action never would have triggered that stop loss. And your runners would have continued to run way up here, getting 5 times your profit target. Wonderful trade. This was another example. On the right side of the momentum, we have permission from the 5-minute MACD, not going down, it's going up, and we get a volume confluence. Might not look like much, but that's a 2-to-1 ratio hit right there. You enter at the close of the candle, you target a 2-to-1 ratio. That's where you take the majority of your profits at a 2-to-1. Not a full 1-to-1 ratio, which would be up here, but a 2-to-1 ratio. I used to take 1-to-1 ratios no matter what, but then I realized if I just take 2-to-1 ratios, I'll get more consistent profits, higher hit rates, smaller losses. The final trade that I took for today were not these 2 red bars. Yet again, this is where my intuition was telling me to enter, but I was still fearful for some reason. But it was right here. Anytime you see a yellow line, that's a trade that I took. Why did I take this trade? The 5-minute momentum is going with us, and it hasn't broken to the upside yet. It's still holding selling pressure, selling momentum. And then we got a bar right here. It was this next one. This was incorrect. This was right here on this next bar. So we get a pop. So we don't continue the upward movement. We actually get a pop to the downside, and it's a little bit hard to see. But it was subtle, and it was small, and we had a volume confluence, which is a volume bar greater than the previous 3. So this is my entry. That's my entry criteria. Entry was right here, the stop loss above that candle, and then we targeted a huge win. So the first profit target was here on this line, and I actually I allowed my runners to continue running, so I captured all the way down here as well. Huge win. And then the final 10 minutes was what we discussed already. So that was the last day of the 2025 trading year. And I will see you in the next one. Take care.